What's up everyone, it's Karthik with MoneyVest. So this is going to be an update and video on Palantir stock with well over 92% of traders and investors currently green and profitable on this company, as it has sparked over a 400% rally since its lows from back in 2022 when it was trading in the low $6 per share. Now the real question now becomes, how much more upside does Palantir really have? Is it overbought, and is it worth buying at these prices? So as always, make sure that you drop a like, subscribe to the channel. We're going to be doing a full fundamental analysis and a little bit of a recap on Palantir in the past weeks here as it continues to push higher and kind of gets closer and closer to all-time highs, trading at just under $32 per share. So again, link's going to be down below if you want to join, be a part of our MoneyVest community on Patreon and on Discord. There is a 16% annual discount that's available until the end of this month, so just one more week left. I've opened up a few more spots, and with that, you can access all the MoneyVest platform features as well as our Discord, trade alerts, trade ideas, options portfolio. Everything's going to be available with the link down below. Speaking of options, I do believe that it's now a good time to be looking at selling some call options on Palantir, considering that it's pretty much trading at a overbought level here inside this area of supply, inside the red rectangle, as you'll notice here. And of course, the RSI, the MACD, and the L3 banker oscillator all suggesting for a bit of an overbought condition here on Palantir, so would not be surprising at all to see a little bit of a pullback down sub $30 again, coming down to $28 per share. But we'll discuss that later in the video. So this right here is where we are with Palantir's overall cost basis, and what you'll notice is that 92% of investors right now in the green, very, very nicely, with an average cost basis of just over $26 per share, with majority of the investors, again, are going to be in green, with a very, very small minority are going to be in the red, with of course, a cost basis well over $35, $37, with the all-time high, of course, sitting well over 40 bucks, if I'm not mistaken. So $45 per share is going to be the all-time high for Palantir. Now, however, we did see a little bit of outflows. So every single day of the week, except for 820, very, very small inflow. But the last 3 days, we did see some significant outflows here, rightly so, because we did have a pretty significant executive selling a lot of shares of almost $11 million of Palantir. So if you read further into this report, Stephen Andrew Cohen, an executive of the company, sold a significant portion of his shares, according to a recent SEC filing, and he held, the title of the president and secretary at Palantir's, engaged in multiple transactions involving, the sale of the Class A common stock resulted in a total value of just over $11 million, and the sales took place on August 20th and 21st with a total of 177,956 shares with a weighted average price of $32.24, and another 595 shares with a weighted average of $32.66 on the first day, and the following day, Cohen sold an additional 166,000 shares with an average price of $32, and the transactions were executed in a series of open market sales with prices ranging from $31 to $32. Now, August 20th and 21st, as you'll notice if you come back to that here, 21st, 20th, we did see a little bit of an increase, but 21st, 22nd, 23rd, all coming in with a little bit of an outflow for Palantir. And as I mentioned before, this could be for multiple different reasons, because just because an insider is selling does not mean that, we need to be bearish on the company or the company's done, because that can really just spark a lot of fear oftentimes for that particular stock. But as I've mentioned before, that from a sales standpoint, we can't really draw any conclusions, right? This could be an automatic sale. This could be a tax event, or something that the insider is going through that we don't really know. And of course, that's one of the reasons why they could be selling. When they're buying, though, it's different, right? You only buy something for one reason and one reason only, because you believe that the price is going to appreciate or there's value in there and you're expecting for some type of gains or returns, but you could be selling for multiple different reasons. So I think it's very important for us to understand that, buying and selling, they are treated differently from different perspectives, because when an investor buys something, they're only buying for one reason. When they're selling a stock, they could be selling for multiple different reasons. And I really do want to point to this, which is going to restore a little bit of that confidence as well, because institutional holdings on Palantir has increased significantly, with about 40% of Palantir's total shares outstanding being owned by institutions, and over 1,200 of them are actually owned. Palantir is owned by over 1,200 institution investors here, right? So funds and pension funds, sovereign funds, as recently as the Norge Bank, so Norway's sovereign fund, essentially buying into Palantir as a new position. We've had a lot of influx of institutional, larger investors coming into Palantir. So even if there are some insiders selling, there is a lot of demand coming in from some of the bigger buyers. So as you can see over here, the buy-sell institution has really accelerated. Over the last couple of years, it was kind of flat up until the second quarter, basically fourth quarter 2022, and it's really accelerated here in the last about two years, right? So 2 years, it's really gone up. So basically 8 quarters, we've seen that acceleration in overall institutional involvement, which, as we already know, is all regarded towards the profitability of the company. As the company's become more profitable, we have seen more and more institutional involvement in terms of how many funds are now interested in buying Palantir. And I can tell you right now that this number was sub 1,000, might even be in the low 600-700s a couple of years ago, because there was not a lot of institutional coverage on Palantir because just of the nature of the business, so much dilution, lack of profitability, no focus on growth. And that has all changed in the last couple of years for Palantir, as it has actually become a good, positive cash flow, very profitable business with actually no debt. Pretty much no debt for the business. Now, coming over to the most important thing, right? So we've talked about how Palantir long-term continues to have significant potential with its artificial intelligence, with the database and everything, all the contracts that they're winning, all the expansions with the current commercials that they have. But the real question now becomes the valuation, right? Valuation, because is it worth buying at over $32 a share? And this was a report from KM Capital. Palantir's stock is now fairly valued, rating downgraded. So basically what they did was, of course, broke down everything: revenue growth, profitability growth, margins are extremely high. You can also do that on our website. So if you come over to Palantir, simply search for it, and we've got an M score on Palantir of 3.29. Again, come over to the MoneyVest metrics, 5-year analysis, a very, very strong, consistent revenue growth. Gross profit also increasing very nicely. So this right here is the gross profit. So very high margins for the business. We're looking at well over 74% margins for the company, which is also accelerated really well. And then, of course, more recently is the time when the company's turned the corner towards profitability. So if you come over to 8 quarters, again, if you come down, this is what we're really looking for, is profitability, turning the corner. Last 8 quarters, the company has done really well with profits. And this is really what institutional investors are betting on, right? When they are buying the stock now, they're betting on this turnaround story where the company's now become a profitability beast with generating margins very, very high, $135 million in net income, with revenues of $676 million. So we're also accelerating the margins, because now we're sitting at well over 20% net margins, which is also getting better and better as time goes on. So coming back over to this, Palantir's current price earnings multiple is extremely high, according to KM Capital. Even if the company maintains above the 20% annual EPS expansion, the fiscal year 2027 forward P ratio will be still above 50. This indicates that the market price is in a very aggressive profitability expansion, which is inherently risky from a valuation perspective. And then moving forward, they did a discounted cash flow model on Palantir and essentially arrived at a fair value of $32, suggesting for pretty much no upside for the next 3 years for Palantir. And they essentially said that, therefore, this time I downgrade the constant growth rate from 8 to 7%. Palantir's fair value price around $32, which aligns with my previous valuation analysis. And the stock currently trades very close to $32, of course, and there is no upside left after the massive bull run of the last 3 years is what we have witnessed. So, of course, Palantir has had significant momentum and a lot of speculation around S&P 500 inclusion. If that ends up happening, of course, that institutional involvement is only going to increase. I mean, you can expect this number to increase, as time goes on, and especially if they are to replace any company in the S&P 500, of course, after being included, it's going to be a big milestone for the company. But that is still a speculation at this point, because we have no idea if or when Palantir is going to be included in the S&P 500. Now, I do agree with the valuation assessment, because Palantir, by all means, by all measures, trades at a very, very expensive forward multiple of 88 and a price to sales multiple of 26, which again is very expensive even for a company like Palantir. And if you come over to analyst estimates, we got a hold rating with, again, the future forecast for earnings expected to go from 9 cents a share or 36 cents per share this year to well over $1.24. That's well over 42 to 38% growth rate for Palantir over the long term. Now, this may still be very optimistic, right? So if you were to put a wager on whether Palantir is going to be able to achieve a 40% growth rate over the next 7 years, or whether it's going to be higher or lower, I mean, my personal expectation or guess is going to be it's going to be lower because, it's a very, very difficult, very challenging to grow, bottom line earnings and just profit in general by over 40%, 50% every single year. So I would be a lot more comfortable in the 30 to 35% range. And even that would be, for me personally, a little bit of a stretch. So knowing fully, I'm still optimistic and bullish on Palantir long term, but it's just from a business perspective, but from a stock price perspective, I think we really have to look at it a little bit more objectively on how much more upside does it really have. And we're talking just 5 to 7 years out. Of course, if you have a 10 plus year time horizon, it certainly has significantly more upside as the business is going to continue to grow. By 2031, expected earnings of $1.24 with an 18% growth year over year and 38% compounded over the next 9 years. But again, even that seems very, very optimistic, with revenue going from $2.2 billion to almost $10 billion by 2031. So just a little bit over 19.5% compounded annual growth rate. So this really comes down to a discussion between growth and price. So price and value, basically. And if the value is still lower, or value is still higher than where the price is trading right now. In my opinion, I think it's fair to say that the price right now of $31.77 is either already at the value of the business or might even be higher compared to considering what the expectations are. So if you come over to the discounted earnings model, let's take a look at net liquidation value, by the way, because this is a brand new calculator that we've built into our platform. And what it does is that essentially it looks for all the assets for the company minus all the liabilities. Liabilities are very, very low for the business, for Palantir, but it only really has just about $4 billion worth of cash and cash equivalents. With other assets, we're looking at $5.2 billion. And then paying off all liabilities, of course, we come in at $1.68 for Palantir in net liquidation value. But if you account for all that growth here in the discounted earnings multiple model, and then if you look for, let's say, the next 7 years, we are pricing in for a 30% growth rate, a P multiple for Palantir, which, right now, of course, 88. Even if you apply a 40 times P multiple and no share dilution, hit calculate, we're looking at 69% overvalued. However, it's not accounting for 2024 earnings per share for the business. $209 was as of 2023. So if we look for the growth expectations for Palantir, which is 36 cents per share, and then if you come over to income statement all the way at the bottom, we're looking for shares outstanding right now as of the most recent quarter, sitting at about 2.4 billion. So we do the math here, 2,414, and then of course that's going to be the shares outstanding divided by what was the earnings expectations. Let's just come over here, and we're looking at 36 cents. So multiplied by 36 cents, we're looking at $860 million in the net income, right? That's the net income for the company. So $869 million in net income divided by 2,414. We get, let me just do that, 869 divided by 2,414. We get a earnings per share of 36 cents, and that's the average expectation. So if we plug in that number, which is 869 million over here on discounted earnings model. So if we hit autofill now and we just plug in 870 million and apply a 7-year time horizon, 30% growth rate, 40 times P multiple with little to no share dilution, let's do 0%. And again, if we are going to change that number to 869, so 870 million, let's do that. And if we calculate, now we're looking at Palantir possibly undervalued with a fair value sitting just under $40 per share. But again, this is going to be a very, very optimistic assumption to make for Palantir with a 40 times P multiple and 30% growth rate. So if you come down to 30, then I think it'd be a lot better in terms of that fair value sitting at 29, closer to $30. But I would be a lot more interested, as I mentioned earlier, for Palantir in the low 20s. That's where I feel like it's even better, because low 20s, we are looking at a 30 times P multiple with a growth rate of 22% over the next 7 years, which I think is a lot more achievable and something that Palantir is most likely to hit over the long term, over the next 7 years. So from a technical analysis standpoint, I think it is still well within its uptrend, higher highs and higher lows, but it's also coming up to its resistance and that area of supply So I would not be surprised, if it does start to roll over a little bit and support level is going to stay put down to $29. And if it does end up, let's say, breaking down below that support, which is going to be this number right here, wouldn't be surprised to see it even further down in the mid 20s. So $24, $25. And then, of course, ideally, preferably over here inside this green rectangle, that area of demand, where I think a lot of buyers can step in to really understand that Palantir at $20 is actually priced a lot better compared to $30 a share, which obviously would be a 35-36% sell-off from its current levels. So hope you all enjoyed this video and found it helpful. Make sure that you drop a like. Let me know your thoughts down in the comment section below for Palantir. As always, drop a like, subscribe to the channel. 16% annual discount that's available until the end of this month. And as always, happy investing. I'll see you all in the next video.